Hi guys, so I'll be making this week analysis. Sit back and enjoy. So, um, if I want to start with, I would look at the previous candle, the previous swing, and how it's moved on the monthly time frame. Um, this move went all the way down, stop here, and then continue all the way down here, and then reverses from here, which means that this swing here took out the previous low here. So now we have the lower low here and then the price reverses from there to lower high, taking out this high, taking out this high. I use the measurement of the body of the candle for a reason. So the trend reverses from there all the way down, not taking this place out, and then reverses all the way up, not taking it out likewise. So if this was to be lower time frame, I would say this is internal liquidity. So they went all the way from there, taking this low out, but not taking this low here out, which means that there is a switch in price action. So there is a switch in price action. Um, from there, the trend reverses and go all the way up, take out this high, and that confirms our directional bias that it's a buy. Then form another internal liquidity here, take it out, and the trend reverses and continue form another internal liquidity here, take it out, and I guess they are forming another one here. Let's see what happens. But overall, we are on a uptrend, right? On uptrend, but yet there's a fair value gap here. There's a fair value gap here. Likewise, there's another upward. But I chose to respect this because that is where the trend stopped. If the trend haven't come here yet, I will probably draw. I'll probably note the fact that there are three or two fair value gaps here. This has been respected. So I'll probably note that the fact that there are two fair value gaps here. I wouldn't draw the two per se. I will draw one and knowing to make my chart clear, knowing fully where there's another one there. So that is that for the monthly time frame, and um go all the way down to weekly. You notice I often go to the higher time frame to start my bias, right? And the major reason is simple. I don't want to start a bias whereby just on the lower time frame making my analysis. At the end of the day, there'll be a big issue to take me out. I often start from the higher time frame so that I can catch the major trend and know where the trend is going because the trend eventually obeys. So if you notice the fact that this trend here look like what we saw on higher time frame, but this is just a swing in between the trend, right? If you this swing here, it's just a swing, this swing here. Oh, by the way, there's still more swing, more swing. But the point is that the patterns look alike. Patterns look alike. So what we have to do now is to focus on here. As you can see that the market is consolidating here, and we are not so sure what the market is doing, but yet we notice the fact that there is a fair value gap up here. Initially, I would have said there's one here, and this guy has um touched into this guy has touched into the fair value gap, and really be this should be how it should be drawn, right? And I think I'd rather prefer to leave it this way and see how it goes. But nevertheless, that doesn't take out the fact that there is still a market gap here that is not yet filled. So anything can still happen. But overall, I drew a fair value gap here, which is when markets will stay up there, expecting the market to come back and touch it, and it did. So if I'm to look at this price action, you notice that the market came all the way back there, reverses, and created internal liquidity, took it out here, all the way back up, took it out, and then they're about to go all the way back up. But then what we are seeing, the market haven't taken this um liquidity out yet. Will it take it out? We don't know yet, but let's hope it does. Well, I drew this here before, and I was expecting the market to come back here and cover it, which it has done. Guys, just know that anytime there's fair value gap in the market always come back to it, always come back to it. So this is another fair value gap, another fair value gap. I'm expecting the market to take this out eventually if they break the structure here. So there's liquidity here, there's liquidity here, there's liquidity here, there's liquidity here. What are we waiting for? We're waiting for a trend, so a trend that will take out the liquidities. Those liquidities they have not been taken at all. The one here hasn't taken. Yeah, so let's just wait for what happens after that. And better still, if you go down to 1 month back and take a look at this trend by measuring it from this low all the way here to the high, you realize that this trend has hit the equilibrium. So it should reverse. And if you look at the equilibrium downward, you notice that there are some reference points here that the market is obeying. The market obeys. So that's that. That's that. You go down to 1 week and we zoom out. You notice that can I use height here? If I use this height here, then let me start to catch this movement. And that is what we are looking for. We are yes, so we're waiting for this to go. Mind you, that's the monthly time frame. On weekly time frame, it takes a week for a candle to paint. So it's not like it's going to happen anytime soon. Then we are waiting for it. We are there waiting for it to happen. So we go down to the daily time frame where you see charts way much more clear. And we notice that I drew the other block here. I'm expecting the market to at least at least take out um, the liquidity of the all this liquidity from here what I'm expecting the market to take it out. Now, what makes it different between my approach and the conventional price action traders is the fact that why them drew a trend line here, expecting the market to bounce back to it and continue, right? In my case, is different. I know fully well that eventually the market will um, go all the way into the uh, trend line. So I think that so I think they say anytime the trend line violates your anytime the market violates your trend, you have to draw another one and keep waiting for the market to bounce back to it. And it happens sometimes. So if we look at this trend here, we notice that a reversal is imminent here because the market doesn't just go all the way up. Even if we're waiting for it on the higher time frame, there is always a wave on the lower time frame. So this is no longer valid for the market to come here. So if I drill this all the way up here, so I expect the market to come uh, back to this equilibrium and I know the reference point for that zone. So firstly, if we look at the market from that point, you realize that the reference points here are so much actually, and these candles, the speed of these candles, it looks like an impulsive movement, and it's very sure that the market will come back actually. Not so impulsive because the candles are small, unlike candles like this. This is pure impulse. But the way they are small, or they move accordingly, just like that. No reversal, no any opposite candle. Everything just goes that way. I believe that the market is supposed to come back and cover some of the space in between. So the entire reference point here. So there's a market gap in between. Please you see market gap in between. Market has to cover this space. Fair value gap here. We will lot of reference points there. Then I'll use this, and if we are using this, we're basically waiting for the market to come back to this fair value gap, come back to this fair value gap as much as it will come back to the other blockade likewise. So we that's two confirmations at once. And mind you, we both know how the trend works, right? I mean, market moves sideways. Let's say, for example, this is the trend all the way up, break of structure, reversal back to reference point there, continues, reversal back to reference point, continues, reversal back to reference point, and then take out the previous low, reverses all the way up, come back. Sometimes not taking this out, not taking the previous low out, sometimes take it out and break the structure, reverses all the way down, which is what we are waiting for, and then break the structure, continue, break the structure, continues, break the structure. It's as simple as that. That is what um, we are literally looking for. And if you don't understand what that is, I think you need to focus on market structure. In subsequent videos, I will make video concerning market structure. Hopefully, you'll be able to learn a few things. So That being said, let's move all the way down to um, 4 hours where we are going to see our trend. Wait, what? Yeah, I don't like my chat. Be noisy. Stay on the weekly. And you, the day that you are, then uh, see have one. One. I'm sure this is from wait, this is too big. Let me use it. Something to no. Wow, 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 wow. I don't need it here. It's too big. It's not going to give me an accurate point for my entry. So as you can see what I was saying, the movement of this candle is so obvious that there will be a market reversal. It just keeps springing up, springing up, springing up. Look like to me, this is what they are doing. Yeah. Look like that is what they are trying to do to me. So maybe when you hit the reference point here, the prices of the way back off, the market continues. You just need to know that this is just a swing in between the whole market time frame. So if I draw this all the way from here, I say you draw this all the way from here up here. So what reference point am I expecting? Below this equilibrium. I'm expecting this um, fair value gap to be respected. Which of these can I do? Let me just take this. Isn't this taking this out? Let me see that. Another. Yeah, there's another. Yeah. Yeah. And there's a lot of other blocks. A lot of other blocks. So I sincerely don't believe that the trend will come all the way this low because our reference point on the hourly time frame is here. Yeah, so let me just quickly so I can use to indicate the reference point. Our Firstly, let me just make this visible. Make this visible on the hourly time frame. Maybe on 15 minutes, it's going to be too big. Um, you know what I'm saying? So this is the 1 hour, 1 day trend. 1 day. Thank God, you can see it's not clear, but then we can get the zone which we anticipating. So I'll take this out. Zone is in. This is refined. I'll take these two out. Okay. So this can stay till 15 minutes. Why? Because it's refined and I want to use it. track entry. So I can see market structure. You can see our market way much more clear on now. And if you draw this all the way from here down here, you notice that the market is still a bit moving as far as the equilibrium. I don't know what they are trying to respect. Maybe this other block, just maybe, or the one above it, or the one above. Maybe this 15, this is here. So I'm waiting for market to take that zone out. You can see how the market spring into this previous low and then pick it all the way up. That is what we call liquidity pool. The cheapest from there. So on my 15 minutes, which is where I'm looking towards taking a trade, expecting this zone to be respected, we don't. We have to keep up. We have to keep up. That is for that. And a major pair that I trade EurUsd and go all the way down to 1 month. It's pretty much the same thing that we do, but the opposite pattern. Look at the 1 month here, we are expecting a buy here, actually we move into this place, to this fair value gap, and the reversal from there, right? The reversal from there. Yet, if you look at this trend, the what? So if you look at this trend, you notice that the market makes a higher high here and the higher low here, another higher high here, taking out this you know, this high, and went all the way to break this low here, consolidated here, reverses, then take this low out again. What do you notice? You notice the fact that this structure is same thing with that directly, which I analyzed the other time, and then so they're basically same thing. Basically same thing. Um, we are still pretty much on a sell trend because there have not been any structure broken so far. If I'm to measure the from here on the way down, I notice that that's come to the equilibrium, and I guess I are expecting another block here. So the market will continue. There's a fair value gap here, which it will eventually take out. But that is a perspective. Another perspective here is the fact that if we zoom in, you notice that the market created the previous low here and took the previous low out. I'm thinking that it might be a buy, but it's not. I didn't respect it because of the fact that the market didn't go all the way to break any for any structure further, such as this is all broken. Good, so that's why I didn't respect it. But either way, let's go down to 1 week. If I was to do analysis for only EurUSD, I might be confused at that point. I might be confused. I might think that's the Bible. That is why that's um the essence of pair correlations. So yeah. So this is the weekly, and there's an internal liquidity that is taken out here, especially the trend of the way back up, back down to come and take all of this out. Mind you, there's also a gap here. So the market will be so fast take it out. But as much as they are breaking structure here, the market might reverse a bit in here and continue the way down, taking this out and taking it out eventually. So this is the 1 day. I want to locate that one. Well, I will not use this fair value gap here. I will not use the fair value gap that I was showing you. And my reason is simple. If you really look at this trend here, if you look at this trend here, you notice that there is a fair value gap from here to here. And you notice that the fair value gap has been respected. So I would not want to use this. Again, there's a reference point uh, below this, above this point, above that point. And if there's to be a reference point above that point, then that point should be here. Here. Let's go the way down to 4 hours. Like I said, expected. We'll probably expect the trend to reverse from the way from here and go back up. Back up. My respect here. No video. So might just start being here and continue the back down. Let's see what happens. That's on 4 hours. On 1 hour. I think I made a video regarding this chart some time ago. I might like to use this as a reference point, but the issue about it is the fact that doesn't take out any low. So when you took out this liquidity here, doesn't take out any low, so I might not use it. Rather than me using it, but it took out that other block actually. It took out that other block. Let's see. So that's that. I'm expecting the market it has still got to the equilibrium. I'm expecting the market to go a bit lower, just a bit lower. And that depends on what DAX does. If DAX decide to gas here, good. If not, then the market will still continue here. Will still continue. So we go down to the 15 minutes and see that anything occur. So that's that. I would say you guys should take my chart and apply to pounds USD. Just the way I did mine, you can take yours and apply to pounds USD and see how wow. So see how it applies to you and um, if you feel um, I made some mistakes with my analysis or I stand to be corrected in any way, please don't hesitate to talk. Thank you. Um, I hope you enjoy my analysis. Until next time, bye bye.